Well, that's good. I thought this was live.
We are recording. No, no, I don't like to do the live. It's you never know what happens.
Okay. Yeah.
All right, so we'll get this going. So thank you very much, everyone. Today on the Practical Broker podcast, we're doing a little bit of a different format. Chad Robinson here. I'm the host of the Practical Broker podcast, and we're doing a new format today called 5, 5, and 5. And the idea is we're going to be interviewing different professionals in different industries for a little quick bite, almost a little espresso shot of the relevant information that you're going to need and you guys want during this time of world uncertainty and pandemic or crisis or opportunity, whichever your take is on it. So again, today, Chad Robinson, the host of the Practical Broker podcast. And with me for the first of this segment of the 555, I have three amazing people that I know fairly well. We have Dale Way from Right at Home Realty. Dale's been a realtor in the Ottawa area for, well, almost close to 20 years. He helps clients in the residential, commercial, development, land development, homes, condos. So he's really diverse. He's seen it all. He's lived definitely through, many of the ups and downs, as well as Jean and his wife, Melanie, who are financial brokers with World Financial Group, and they're here to help clients steer through, the other side of this equation of what do you do with your investments and your life insurance and all those kind of things. How does that work? And Jean's been a planner, well, not a planner, the financial specialist for over 12 years. And Melanie's a little bit newer to the business, 3 or 4, I believe, right, Mel? 3 years?
Yeah, that's
Yeah.
correct.
Oh, that's fantastic. Um, so, guys, why don't you give a quick little bit about yourself, Dale, if you want to start? Just I know I kind of introduced you there, but give me a minute of about you and your experience in the real estate world.
Yeah. You did a good job, Chad. You pretty well covered it all. I have been in real estate now for 18 plus years, and I primarily focus on investors, new home construction, as well as resale residential condos and homes. And I've been out in the rural area as well. I've done a few farms and cottages as well. And
That's awesome.
I just go wherever my clients take me.
Perfect. That's great. So, yeah, many of our listeners and Mel, husband and wife teams that work together are an awesome thing. And tell us a little bit about you guys.
Thank you so much, Chad. I appreciate it. Yeah, I've been in business, like you mentioned, for a little over 12 years. I got introduced to this industry back in '07. So perfect time to get involved in the financial industry. So I've weathered a few storms, and, we just love being able to kind of provide some education to people. I think that education is a foundation in any industry. And it's really making sure that people understand what opportunities are ahead of them, regardless of whether that's through, insurances, it's through investments, it's through real estate, those kinds of things. We're fortunate to be connected with the people that we are, so that we can send people in the right direction. But it's really allowing people to utilize that education that they receive from us to allow it to empower them to make decisions that they feel really confident in. So it's really that, extending our confidence to them and allowing them to put themselves in a better position, all things said.
Perfect. That's great.
Awesome. And like you mentioned, Chad, so for me, it's just been just a tiny bit over 3 years.
Okay.
So it's technically my first period like this, where it's a bit more challenging. The past 3 years, I've been pretty
Mm-hmm.
pretty good, I would say. So I'm fortunate to have Jean here, who had kind of have this experience, and then just together we can do it all, and we can just make sure that clients are understand properly what's going on, and just feel more secure and confident actually that we're going to get through this, right?
Absolutely. Well, that's great. So Dale, one of the questions that everybody's on their mind is, if you own a property, what's happening to the real estate market? We hear one article, it's crashing, another article, it's going up. It's a buyer's market, it's a seller's market. What are you seeing out there right now? We're the middle of April. So depending on when people are listening to this, things are changing quickly. But what are you seeing how the real estate market in Ottawa is faring right now?
Well, right now, I guess the best way to describe the market right now is on hold, and like it should be. Everyone's listening to Health Canada, stay home, stay safe. But there are people that have gotten caught in this loop, and they have to do something. Like, you have people that have sold their home. They need to find a place to live, so they actively still have to be out there looking for real estate.
Right.
Then you have investors. You know, they have vacant units. They need to fill those units. They can't keep them vacant. So there is still activity. There is still movement in the market, but the market right now is pretty much on hold.
All right, interesting. And the stuff that has been selling, have you been noticing any price changes? Are they going up, down? I heard last week a couple of realtors were telling me you still had multiple offers going on.
Yeah, ironically, there has not been any significant price reductions in the market. It's been holding strong. So
Nice.
the inventory that has been on there right now has been moving and keeping its prices.
That's excellent. That's really good to hear, especially for the Ottawa area, right? I mean, we've always weathered the storms really well because of our income and employment dynamic that we have here.
Hmm.
Do you think it's going to play out in the broader spectrum of like Ontario and Canada? I mean, I know nobody has a crystal ball, but just you've been around this for a while, and I just wanted to know what your opinion was.
On what's going to be happening in the future, or
Yeah, and the bigger perspective.
big
So when we
picture?
come out of this, and
Yeah,
hopefully sooner than later, you
yeah,
know,
yeah.
what do you think? What do you feel is going to happen?
Well, I mean, because there's a couple of things happening. You have to look at the past. So before we came into the COVID, we were firing on all cylinders. The market was very, very hot. And those people haven't gone away. They're just on hold.
Right.
And as our economy starts to fire back up again, those people are going to come back. And so I don't see a big blimp happening in the real estate market. I think it's going to be, we're going to be 12 to 18 months as the government's talking about. But as each sector starts to fire, the real estate market is just going to fire with it.
Right.
And Ottawa, we're very lucky because we have a very large sector of government and high-tech employees. So we don't get hit as hard. But
Right.
in the rest of Canada, the government is already talking about this. All the stimulus are going to be going into place. I think when we start to get these cylinders firing, the government is going to be putting so much money into getting everything moving and going. Um, it's going to be a blimp. I see no major impact on the economy as far as real estate goes.
Oh, that's great. That's great to hear. I kind of hold your view as well. I think that we're, especially here in Ottawa, we're really well positioned, and the markets where you're right, the government's going to be putting a lot of money into it. So cross our fingers that we come out of that with a soft landing.
Yeah, I
One
agree.
of the things that I've seen a trend, I've had a lot of customers calling me, and I don't know if you've had any yet, and I don't know if this is just an initial knee-jerk reaction, but I've had a lot of people saying they want to move to the country now. That's it. I'm selling my city home. All the things you did, right? You've got a beautiful property in the country.
Yeah, yeah. Um, well, I mean, I guess I made the transition where I still have a place in Ottawa and a place in the country,
Yeah.
primarily because I'm kind of waiting for the autonomous vehicles to come along where I can just hop in my car and work as I drive to town. Actually, to be honest with you, I haven't had a lot of people come to me and say, "Yeah, I want to move and get out of the city." I could see the reasons why. When you're out in the country, you can weather these storms a little bit easier than you can in town.
Mm-hmm. Absolutely. So Jean, Michelle, what you guys must be getting a lot of calls from your clients, if their investments and their RSPs and stuff have dropped. How are you guys handling those kind of conversations with your clients, and what are you telling them to do?
A very good question, Chad. And it's funny, just to touch on what Dale was saying there and what you just mentioned, me and Mel actually have had that conversation about, looking forward to living in the country at some point. Her father's a little bit further out in the country, and it's a great place to be as opposed to kind of us being in town. But to go back to your question, yeah, you know what, we've been very, very fortunate, and I know I can't speak of every financial professional, but we've been very fortunate. We haven't had too many calls at all. And I think it goes back to the educational component, which I firmly believe is such an important thing to have in our industries. A lot of my clients, if they have called, it's because they wanted to invest more money because we've educated them that when these crises happen, it's a good thing to be doing. Right. But the odd few calls that I've had, I've just had to remind people that really it's important to stay the course. If an investment was good pre-COVID, it's going to be good after COVID for most investments. We've even seen some areas where they've been booming. I mean, we're on a Zoom call right now Zoom in the month of March was up almost 40%.
Right.
Amazon was up almost 30%. So there are some industries that are flourishing through this pandemic that we're in. So when I have gone calls, it's just reminding them of really those basic things, is really staying invested.
That's great. No, that's really good advice. And is there a certain segment that you're advising people to do, or are they, if they're looking for investment options? I know each client is very individual, and you have to have an individual plan, in client meeting. But are you just recommending people stay in equities or move to bonds, or what do you? I mean, we have the Dale's crystal ball of the real estate's rebounding. Do you think the TSX will rebound as well?
I love that question a lot because it's funny when I look at what's taken place since I started. The clients of mine that have fared the best are the ones that have been literally in full equities and have stayed in full equities.
Mm-hmm.
A lot of people shy away from being invested fully in equities, but if we look at, traditionally speaking, they're the ones that have made us the money.
Right.
And so I encourage people to still be involved in equities. Usually when markets come down, those do come down the most, but they tend to be the ones that bounce back the quickest. And again, it's something that I think that everyone should be involved in, even people when they're retired. It's funny, I have some retired couples that along the way I've educated them to, have and hold equities, not their entire portfolio at that point because they're in retirement, but that's the portion of their portfolios that over the last 5-10 years has made them the money that has allowed them to actually continue to increase their monthly payments as opposed to, receive less as they get older.
Right.
Then with respects to the markets, when we look at what's taken place as of March 23rd, US and Canada, we were down almost 35% in both.
Right.
We're now at 18% and a half that we're down in both. And so markets have bounced back already quite quickly since March 23rd. I don't think that, we're going to continue to rock it up. I think we're still going to see a little bit of a downturn. But, if I did have that crystal ball, I feel that we've seen the bottom. I think it's gonna trend back down a little bit, but I really believe that the market's trying to figure out where it's at, what's going on. It's never seen anything like this, but we're seeing people are still buying, and we're still consuming. Everyone's still got to live their lives, even if they're staying at home. So I think it's still a matter of making sure that people are still very much invested. And I do encourage people to be in equities because that's where the money has traditionally been made, the bigger sums anyways.
For sure. Well, there was a really good presentation by Benjamin Tal, the economist, that he said this is a very unusual, recession, depression, whatever you're going to call it, because the demand was there, it was strong, and it's not a liquidity crisis like we had in 2008, where everybody lost confidence in the markets and the mechanisms. It's just a world pause. So it's there's going to be a lot of PhD papers written about this when we come out of it. One thing I've noticed from the micro side of a mortgage broker here on the street is that the B lenders, there's going to be people that their credits are going to be affected. There's going to be self-employed people losing their jobs. So from an equity perspective, I think, and I mean, again, we all do our own things. Is today I was looking at what are those lenders that specialize in that market? Because the next 12, 24 months, I think their stock prices are going to be going up. But that's my own crystal ball and not giving advice. Star. So one of the other calls I get often is, and you might have had already with some of your clients, is should we get mortgage deferrals? These banks are offering the mortgage deferrals on credit cards, on car payments, on everything. There's a lot of misinformation out there. What I've been telling all my customers is if you need a mortgage deferral or credit card deferral or car payment deferral because you've lost your job, absolutely get it. They're there to help you, but it's not free money. A lot of people think that this is free money, that, the bank's just going to forgive 3 months or 5 months of my mortgage payment. They don't. Effectively, that money you should be paying, that interest, is being added to your principal. So your principal is going to go up and your payments are going to go up once you come out of this COVID crisis. So be careful. If you need it, get it. Don't struggle. Don't feel guilty about it. But only if you really need it. If you still have a job, you're working for the Gov or you're working for Shopify, pay the mortgage. The banking system needs the cash flow. It's a business like any other business. And if everybody stopped their bills and stopped their payments, we're going to collapse. So if you guys have ability, I always say pay your rent, pay your mortgage, make your car payment. But if you need help, absolutely get it. Are you guys seeing any other questions coming for your clients about mortgages and should I refinance, or are you fielding any kind of those kind of calls?
I've had several clients who have asked recently what's going on with rates. You know, they've noticed that the rates have continued to gone down, and then south of the border, they've made mention that rates seem to have gone up there. Some have asked me, why is this happening? I haven't been able to give them, you know, a straight answer. What's your perspective on that, Chad?
Oh, perfect. Great question. So I have a great blog article on my website. I'll put it in the show notes here where I dove into this on a little bit of a geeked out level. But effectively, the bond market, which represents fixed rate mortgages, have actually started trending up a little bit. So that's why you see fixed price coming. It's all effect of how much liquidity there is in the marketplace. And even though the governments are throwing in lots of money, the banks are in a way hoarding it. You know, there used to be a really smooth interchange between, you know, TD Bank and Scotiabank and this lender and all these merchant banks, where now that mechanism to go between banks isn't running as smoothly as it should. So that's one of the reasons why you see the fixed rates. And then the variable rates is really interesting. Even though the Bank of Canada has dropped their rates, so prime now is 2.5. We used to get pre-COVID, I could have got somebody a mortgage prime minus 1%. So that was pretty awesome. Right now, the mortgages, the variable rates are prime, you know, just at prime or even prime plus 0.2%. So all that discount has gone away. And again, it comes back to the liquidity between the markets and between the banks, that they can't actually transfer their paper very well between each other. So that's the reason why they're going up. And if you really want to geek out and get the technical, I have a 1,000-word article on the website.
Fantastic.
Well, great, guys. Was there any other closing comments you want to make? We always like to keep these segments short. Dale, last bit, what should people do if they're thinking of buying and selling in the next 2-3 months?
Well, I mean, stay home, stay safe. If you don't have to, I'd say you should wait. And if you need to, then by all means, get out there and do it. We're still working. We're still here to help you guys.
Awesome. Thanks, Dale.
Thanks, Chad. I appreciate you having me on the show today.
My pleasure. Chad, Mel, how about you guys? What are you, closing comments?
Again, it's a little redundant, but just always reminding people, stay invested. And if you've got extra cash, look at taking advantage of this unprecedented opportunity we have ahead of us. Yeah. And I know that, you know, someone working in the mortgage industry, such as you are, I think for us on our end, me and Mel, is making sure we remind our clients who have equity within their homes that, hey, this is a great opportunity to take advantage of so that you come out of this a whole lot stronger than you had gone into it.
Absolutely. There's definitely some opportunities coming down the pipe. Well, thank you, everyone. I really appreciate it. And guys, thank you for being on the show. And I really appreciate you guys giving the wisdom. We will put this up on the channel with all the show notes, and as well as everybody's contact information. Dale and Mel and Jack, all the contact information, guys, will be in the show notes. So if you wanted to reach out to any of them, if you have questions about your RSPs or your life insurance or how that affects you, or what your home's worth, or should you start looking for a new home, you'll be able to reach out to Dale. Thank you very much, everyone.
Thank you, Chad.
Thanks.
Take care, Dale.
Take care.
All right, there we go.